Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry I'm late. I guess sometimes it just takes me longer to eat than it should, and that was today one of those. I wanted to make sure that I eat really good. I got some interviews and stuff today. And it looks like I'm already missing some stuff because the treasuries are going here. What are we at? 404. Okay. So it's not that big from yesterday, but we are a little bit higher in yield as I kind of suspected. Like I said, I kind of wonder if the play here is go short the treasuries into the year end after that non-farms last Friday. But, it's down a little bit. It's not like huge or anything like that. There was a little bit of a pullback, and now we're hitting down much more aggressively this morning. I'm concerned that some of the flows here during our session will be a little bit mixed, though. So I don't think that just means go short here for us, the day traders. S&P 500 still within that range there. Oil spiking up really, really big overnight and coming back, and there's still a lot of tension over there in Iran, Israel. I'm really concerned about that. We can talk about that later. Gold and silver still sideways, although silver seems to continue underperforming a little bit. Kappa taking a hit. So over in China, like the Hong Kong exchange gave up like half of its gains from the whole we're going to stimulate the Chinese economy. So that's a pretty big hit. When we come over to the Japanese yen, still reeling from that big drop that they had yesterday. And the dollar back up to 102. Bitcoin still not doing anything all that interesting. All right, let's put my nose here real quick. Okay, well, because it is a Tuesday, I should take this a little bit more seriously. Let's come in and do some notes first. Doesn't look like we got really any. Well, we got U.S. trade balance. U.S. trade balance. Israel, Iran tensions. China pullback, let's call it. We got 3-year note. Okay. And let's say momentum after Friday's non-farms still appears, still appears to be a factor today. So given all of that, I don't see anything that is explicitly all one way. There is a possibility of buying flows coming through and really pushing us up quickly if there was something in, missiles flying or some Secretary of State says something, right? We could have that kind of action. Otherwise, the trend probably is down, but I think that here during the most active parts of the session, it's going to be a little bit more limited. So if I did take a trade, and given all of that, I'm much less likely to take a trade. But if we get some sort of a situation where things look really unbalanced, I might try taking a mean reversion trade today. We'll see. All right. So let's minimize that. So a story I read. You know what? Let me just go find it. Pamela malfunctions during 60 minutes ambush over the border and firearms. Oh, I didn't see that. Oh yeah, you know what else we need to put on here? Hurricane Milton. I don't know, man. I'm still looking at this. My understanding is that this should not be as strong of a hurricane by the time it hits landfall, and that generally speaking, things should be okay. Like, of course, there's still going to be damage on the coast and people displaced and people are evacuating and everything, so it is going to have an economic impact, but it's less likely that it will be another huge damaging hurricane like the last one that we just had. But they're not taking any chances because this thing was really, really strong. At one point, it was really strong, like one of the strongest hurricanes ever recorded. So that's why and you know, like, it's weather predictions, you can never be too careful with that sort of thing. So I don't think that that's a huge factor today, but it could. And it especially could tomorrow once we kind of hit landfall and we see how things are going. But Uzi is saying that it's you know, hurricanes are fun. So I don't think that is going to be too bad. I don't know if you spoke about it yet, but what do you think? You know what? It actually has come up a lot over the last week or two. So here's the thing. I totally understand why they got rid of it, because for their simulators, when you are trading a prop firm account, you're essentially trading a rhythmic demo account is what you're doing. And the rhythmic and CQG demos are not very good at tracking your position in the queue. They don't have the resources to track every retail trader's sim orders over a long period of time. And so the way that you can fool those sim is you put a limit order in, and if the market moves away from that limit order and then comes back, it automatically thinks that you're at the beginning of the queue. So you can use alligators and things like that. So like if you have an order at 12.5 and you're at the front of the queue, then you could like catch the edge at 13 as it's trading through. And then, you know, if anything goes off at 12.5, you take a profit. And that's how they're doing it. So that's why they turned it off. You know, it would be nice if there was a solution that actually give you a good fills, like Jigsaw's system. The demo accounts in Jigsaw are extremely accurate, more stingy than real life, in fact. Okay. But you know, I think that part of the reason why they would do that instead of like, you know, moving heaven and earth to get a better sim system is because not very many people trade the treasuries on the demo accounts, or sorry, on the prop firm accounts. Not very many people trade treasuries over there, which is kind of sad. Like that again comes back to my primary criticism of the combines. The rules and the targets encourage you to trade very, very aggressively. You are essentially trying to double your account within a 1 or 2 month time span. That's extremely aggressive, and it can happen you can make it happen by taking on a lot of risk and really trading big size and everything. But when you're taking on that much risk, you are essentially destined to fail at some point. Like you are going to implode sooner or later. And really, I think the thing that would help most retail traders is trading smaller and being more selective in their trades. And playing the longer game, which might include holding positions for a longer period of time, perhaps several days, or if you have, the capital, several months. And the one way that you can kind of do that is with treasuries. And of course, now you can't trade them. So really, it's just, encourage everybody to trade ES, NQ, and oil. That's how the majority of people that pass combines do it. So prop firms are selling us simulated market conditions which can be manipulated. Can they be trusted? Well, like one of the things is that I'm really surprised that somebody played that system enough to like pass a combine and for them to do something about it, because it's a really tedious thing to do to take advantage of. Thank you. But listen, the prop firms, they don't make money from you being successful. They really don't. And Steffa, good morning. Let's see here. Uzi, our forecast is 20 to 50 mile per hour winds. Well, that's just fall where I live. Yeah. Or more like spring. It hasn't been like that this fall, but in spring it's usually like that. You'll get the winds that come through the canyon because those storms, those cold fronts will come on over the mountains, and then the cold air will just rush down the mountain, and we'll get like 50 to 70 mile an hour winds sometimes just coming through the canyon. Anyways, I'm in Central Florida though. The coast gets hit by those winds rolling off a flat ocean. By the time it gets to me, the winds are all sheared by hundreds of miles. The structures can still topple a tree if the ground is wet enough, but my house won't explode or anything. Gotcha. Okay, so I was looking for a story, wasn't I? Oh, I didn't see this. Israel will respond in the manner of our choosing and at the time and place of our choosing. At the moment, everything is on the table. Okay, so here's the story I read yesterday that really stuck out to me. Not a lot of people are talking about it, so this could at some point in the future provide an edge, but something picked up on my radar that I was really concerned about. On Saturday, a 4.5 magnitude seismic event occurred in Iran's Semnan province, sparking speculation that Iran has tested a nuclear weapon for the first time. Such a seismic event is typically the result of an earthquake, but speculation has arisen on social media, suggesting the event was instead an underground nuclear test carried out by the Islamic Republic in response to Israeli threats to bomb Tehran's nuclear energy and oil facilities. So this is like, okay, you're concerned that Israel is going to bomb your nuclear energy and oil facilities. So what do? You show them that you have a nuclear bomb. Wouldn't that just make Israel even like more likely to target their nuclear sites? Like, I don't know. I'm a little scared though. Like, if Iran has a bomb, that would be such a huge deal, I think. That would be such a huge deal. The question is, like, how likely is an area like that to be a nuclear event or an earthquake? Earthquake occurred in Arandan Semnan, with its epicenter a mere 10 kilometers beneath the surface, which is relatively shallow for seismic activities of this nature. The depth, coupled with the timing and geopolitical tensions involving Iran's, fueled the speculation. Immediately following the event, social media was abuzz with users linking this seismic activity to potential nuclear tests. Some pointed towards the proximity of the earthquake's epicenter to known or suspected nuclear facilities in Iran. Speculation was further fueled by the ongoing conflicts and tensions between Iran and Israel, with many users suggesting that this could be a covert nuclear test signaling Iran's military capabilities. I don't know. Counter arguments for a natural earthquake. Seismological normality. Iran sits on major fault lines, making it one of the most earthquake-prone countries. Therefore, natural seismic activity is not unusual. Lack of immediate evidence. No radioactive fallout or other signs typically associated with a nuclear test have been reported. Moreover, the seismic signature, while suggestive, isn't definitive without further geological and possibly on-the-ground analysis. Okay. So, just something I wanted to point out, think about. I wonder, it seems that Israel has said that they will strike back. The question is, how are they going to do so? And they have a lot of options. So, and I don't know if we can really predict what they will be, because, remember last time when they striked back, it was kind of like they did something that was like really surprised the Iranians about what their capabilities were. Okay, here I'm getting a tweet from Nick Timmeros. New York Fed President John Williams, the current stance of monetary policy is really well positioned. The decision to cut by 50 basis points was right in September, and it would be right today. Oh, I don't know if I agree with that, John. I really need to hear your reasoning there. We had put it in a very restrictive stance of monetary policy, in my view, and we had kept it at a very restrictive stance all the way until the September meeting. I personally expect that it will be appropriate again to bring interest rates down over time. Other bits from the Financial Times interview. On monthly job growth, which has been volatile, things like quits and vacancies probably give a better read of what's happening in terms of the state of the labor market. On why the unemployment rate has risen, with GDP above 3% last year and running around 2.5% this year, above the estimates of the long-run growth rate of around 2%. My reading of the evidence is that we're still in the midst of getting significant strong labor supply growth from immigration. That's probably going to taper a bit, but it's still positive, at least in the near term. The supply side growth rate of our economy has been above 3% over these 2 years. Williams is relatively unperturbed by the surprising stubbornness of shelter inflation. Higher housing readings are probably, in a way, echo effects of past events. Doesn't reflect the tightness of the market or the imbalance in the economy in terms of inflation rates going forward. Forward-looking indicators are moving closer to our target. Okay, so if interest rates were really, really restrictive, and the economy is in a good spot that we can normalize them, then we need to bring interest rates down, and we can bring them down 50 basis points at that meeting, and we'll probably still be restrictive after that, and so we would need to continue to bring interest rates down. I'm a little bit skeptical about that one, and I think the reason that I'm a little bit skeptical about that one is that there seems to be there is some impact that is, to a degree, what the absolute level of interest rates is, but there's another one which is as you change it. And I'm concerned that changing the interest rates too quickly and easing too quickly can can have negative effects. And the labor market being really strong again makes me concerned. Well, having one month where it was really bad and then 1 month where it was really, really good has me concerned that the possibility for inflation accelerating again is still there. And we have some historical precedent for this as well, that there can be like a second wave of inflation. That's what happened in the 70s. Now, granted, the reason that happened in the 70s was basically because LBJ bullied the Federal Reserve into it. But I digress. Mir says we have a lot of time. Yeah, why are you saying that? Well, so far, the first 30 minutes of this treasury market has been incredibly tight. They've basically sat at 13.5 this entire time. So that does not bode well for the session. I'm just gonna pop around here and see. Close this window. Let's watch this 60 Minutes moment from Kamala Harris. It really seems like to me that the campaign has been going worse and worse for her.
President Biden stepping down and basically handing you a nomination. You didn't have to go through a primary process. You didn't have to fight off other contenders. That's not really the way our system was intended to work.
So I am flabbergasted that it's taken 70 days for the media to ask her this question. Can you believe? Like, because this really was the thing that I think on everybody's mind from the very beginning, right? Right, well, let's see how she does.
President Biden made a decision that I think history is going to show is rare among leaders, which was to put country before self. And I am proud to have earned the support of the vast majority of delegates and to have been elected the Democratic nominee. I am proud to have received the endorsement of leaders around this country from every background and walk of life to fight in this election over the next month for our democracy.
But I think this truncated process is why people think or say they don't really know who you are.
Look, I've been in this race for 70 days.
So I didn't think that response was that bad. But just saying, well, I've been in this race 70 days, okay. Huh. Well, there's more clips in there, but I don't necessarily need to watch it. Yeah. Bill Agman, as we approach the election, polls begin to make it clear that Donald Trump will win. We could see other media organizations abandon their short-term efforts to get Kamala Harris elected and start to play more fair as they become concerned with the damage to their reputations. Yeah. Like, so this is kind of a weird dynamic, I think. I do think that the polling continues to show and is getting even more strong in favor of Donald Trump winning the election. And I think that the likely case here is that when we get to election day, that it's you know, pretty much everybody is going to be saying that Donald Trump is going to win. The problem with that is that even though all of the information that we have suggests that Donald Trump is going to win, the margin that we got there is super, super narrow. And so, like, if everybody thinks that Donald Trump is going to win, and so some people decide to stay home and whatnot because of that, you know, that could be something that could cause him to lose. Like if the Republicans rest on their laurels and the Democrats still have a really strong get out the vote game, you know, that could cost you the election. It's just that close. It's just that close. But on the other hand, Democrats are easily discouraged. Democrats are easily discouraged. I think there's a lot of people that they get on election day and it says that Donald Trump's going to win, that they are not going to show up. Of course, the Democrat Party still has a pretty strong get out vote apparatus, and it doesn't look like the Republicans really have it. The Republicans are essentially relying on private organizations to get out the vote, and it remains unclear if that's going to work. So it'll be close. But I think that what these guys are saying is still generally correct, that the media is not going to be as friendly to her as they were, because they need to preserve at least some amount of credibility. Well, still no change. Let's keep browsing around here. Elon Musk interview yesterday with Tucker Carlson. Not seeing it much too interesting on those fronts today, though. Kamala Harris, I have a clock. Yes, of course, I have fired it. This one's funny. I think that their campaign early on identified her position from the last Democrat primary, where she was so ridiculously anti-gun, is like a huge vulnerability for her, and they're trying to fight. But I really don't think anybody believes her. Anybody that's concerned about gun rights is like watching her do this, bend over backwards and laughing at her about it. Okay, so here's an interesting thing going on also. Here is advice animals. If the president or vice president calls you to talk about disaster aid for your constituents, you take the call, but that's none of my business. Well, he did speak with the president, but the vice president has never been involved in those things and is only trying to get involved for political reasons, and I totally support his decision to not take the call from her. Mike Johnson says there's no rush to approve FEMA aid. Really? Okay. There's no rush since it takes a while to calculate the actual damages. We'll be back in session immediately after the election. As 30 days from now, the thing about these hurricanes and disasters of this magnitude is it takes a while to calculate the actual damages, and the states are going to need some time to do that. Yeah, but I think the whole thing is that people are concerned about the immediate aid, because the immediate aid was not there in the Carolinas. I think he's being a little short-sighted there, to be honest with you. Like, it's a legitimate argument, but I think that's missing, and it's missing the like the narrative and everything that it sets, right? Okay, well, we're getting some movement now. Some clicky click. Where are they coming from? Somebody messing around with the bid at 11 there. Oh, that's interesting. See all of this kind of, I want to call it congestion for some reason. Like lots of limit buy orders below us here. A little bit thicker than the offers. The offers are like 4,000, and over here we got 5,000, 44, 46, another 5,000. And those big orders are kind of clicking around down there. So the robots are up to something. I don't know if that necessarily speaks well to we're going to break the lows, though. FEMA spent $5 billion on COVID last. Really? That's crazy. I mean, yeah. So like the thing is, as it pertains to what Congress can do, maybe he's right that we don't know how much money we need yet anyways. But the issue that the American public seems to care about right now is that FEMA appears incompetent. And they've been incompetent since way back during George Bush's time with Hurricane Katrina. And it's still really, really bad. So, like, it seems to me like the reason that disaster aid for hurricanes and all of that aren't a bigger deal is because the state of Florida itself has gotten so good at it that they handle it for the most part. That whole thing, I don't know how that's going to turn out, because on one hand, the hurricanes have appeared to like further weakened Kamala Harris, but like some of the areas that were hit the most by that last hurricane were Democrat areas too. So I don't know what to make of that. Like, what is the impact on people's perceptions versus the impact on potential voter turnout is I can't even fathom. Tampa is a big Democrat area. It's virtually communist. Yeah. So does the so this the first question is, does a hurricane will the hurricane this close to the election decrease turnout in those strong Democrat areas, or will it increase turnout? It could increase turnout, you know, like. So I haven't seen any kind of good data on what the impact actually will be. Oh, looks like we did take a new low just by a few, but it's not really strong. This is one. So I'm really torn on this one because I definitely get that vibe that like the treasuries want to sell and that a real bender is possible. But the way that they're behaving right now is not very indicative of a strong trend down day. Like, they're knocking on the door. It's pretty quiet still. There's relatively large orders down in there, so it kind of seems like that there would be a lot of volume that they would have to get through in order to continue pushing down. So that kind of has the makings of a mean reversion trade in it. And, you know, that's what we were looking for, was a mean reversion trade. But Amir says the market is not suitable for trade, and that's certainly true as well. Like, when you have the first 30 minutes of the treasury session, it just goes sideways. That's usually not good for trades. I was thinking about this the other day. Like, what if we had a graph and we said, here is the amount of risk involved. Blah, 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 blah. Here's the amount of risk involved, and here's the amount of opportunity. Right? And so, generally speaking, we would expect that the more risk there is in something, the more opportunity there is. But the way that it works with markets, I think, is that you have this thing where opportunity is low, and then, you know, we get some more activity, so we're able to have places where trading is good, and then it turns into the risk is just too high. So, like, we want to trade in this window right here. Let me do that with a different color. We want to trade within this window right here. And right now, we're probably right here. Right? Right now, we're probably right here. Where the amount of opportunity relative to the amount of risk is not, there's not enough activity for there to really be the opportunity, right? And then there's this other side on the other end where the risk becomes so much that it's just not worth it. Like, yeah, there's a lot of opportunity. Like, there's more opportunity up here than there is down here, but is it worth the risk? No, it's not. It goes way far this way, right? r/politics. Kamala Harris's viral interview appearances are really pissing off legacy media. I don't know if I would call her appearances quote unquote viral, but probably a legacy media is upset about it. Tonight's the first hockey game. Yay. Did you see the? I only looked at the first one. I only watched. I pulled it up here earlier in the stream. I only watched the first one where they asked her about, that she, she's only the candidate because Biden dropped out and they didn't have a real process and everything. Okay, well, my instinct was that it was going to revert back. I think that we were correct on that. I didn't take a trade off of it because I felt like that the opportunity available for it wasn't enough. Was 4 ticks worth it? I don't know. But let's continue to watch it here. It might continue to do some interesting things. I'm wondering if they're going to whip back out the other side or not. Because I'm seeing the Japanese yen hit back really hard here. We should be on our toes because, the risk of geopolitical headlines are still there, right? Okay. Seeing a little bit of a move in oil here too. What's that? Like, there's definitely hints of something happening, but not enough to sort out what the impact on the treasuries might be and or what the cause might be. You must be into boxing. Why do you say that? I don't know enough about boxing, to be honest with you. Would have thought that something like that interesting. Well, I have like a punching bag in my garage, in a speed bag. I use it, but I don't know anything about boxing. And probably if somebody that knew something about boxing watched me punch the bag, they would probably be horrified. Hey man, welcome back. How are you? Man, this could be a really slow day. I don't know. I yesterday was doing some calisthenics because I haven't been working out as hard or as much. Like, I'm really not able to hit the Olympic weights like I'd like to because I'm watching the kids most days. Like, when my wife works, she comes back late. So I've been doing the calisthenics instead, and I hit that pretty hard yesterday, and I can definitely feel it here in my shoulder chest area. Tempted to buy, you have all the day and then the market open on 6 p.m. I just got to continue working, get a new job as quickly as possible. Like what? So I tell you what, I can kind of see in myself that what do I want to call it? I don't know, that propensity to negative emotion is just like, if there was a job that I was really hopeful about and they come back to me and say no, then like you get pretty down. But then, you know, I'm on ADHD medication and everything. I have a great deal of emotional control now. You know, the next day I bounce out of it. I'm like, no, the reason we're in this situation is kind of silly. We have really good skills, so we should be able to find a new job very, you know, within due time. And it can happen very quickly, you know. So like right now, I feel like my position is dire, but with as fast as these companies move and everything, I could be there next Monday, you know. And then that will solve a lot of problems. But then, I don't know, my wife will still be on full time and she'll have to work more. So. So it'll be funny, probably come out of this with more income in the end. And we get to make some content for the channel. And I would say, even though I haven't put any content out, that the channel's doing pretty good. So I am quite hopeful for the future of the channel. I keep getting comments from people on some of the older videos that we have, you know, like about how great of a video it was and that it's criminal that there's not as many comments and views on a video of that caliber. So that's really encouraging. No, I'm not a full-time trader. Listen, I would strongly recommend against trying to become a full-time trader. Even if you really find an edge and you really build up a large enough account to the point where, you know, you can make decent amounts of money from it, I really wouldn't put all of your time and effort into the trading. I would still have some other gig that is capable of providing your full living for you, because the profits from trading can be so inconsistent. They really, really can be. And you're not going to trade very well when whether you eat tomorrow or not depends on your trading. So don't go down that route. I know it's the dream for everybody, but it's not what you think it is. You don't want to become a full-time trader. If you really want to become full-time, start a fund and live off of the management fee. Start a hedge fund and live off of the management fee. That's the true path to being a trading professional, per se, right? But like a retail trader and you just make money off of your trading profits, it's not that great of a deal. Maybe you could do it if you were already a millionaire, but for the average person to put that as your goal is foolish and short-sighted. And I really bothers me when I see so many people pursuing that, because like that's time, and meanwhile you could have been spending time putting your efforts into some other venture, that like starting your own business or whatever it is, and you'd probably be further ahead than that. Like, I'm not saying don't trade if you have the interest in it. You're like me, and nothing's gonna keep you from it, right? But I've got other gig, right? I have a gig that when I am working, I get a lot more income than I actually need. And that gives me the ability to take risks. And I'm kind of saving up so that I can take big risks at some point. Like running a swing portfolio strategy. Depends on your safety net and make other e-com affiliates business. Yeah. Say, I think I have a pretty good safety net. I guess, you know, like, I haven't needed assistance from anybody yet. Probably will before the month is out, but depending on whether I get unemployment. If I get unemployment, then we're okay. But it could be up to 4 weeks before we find out on that one. Can you believe that? Basically, if you've been discharged, there's some adjudicator that has to go in and make a adjudication on it, decision on it. That can be up to 4 weeks. Probably will have another job before that. Oh, you're going long 12, huh? Well, I can see the case for going long in the flows. You know, I kind of suspected that it would be short today, but it really hasn't. In the 2-year in particular, it's been buying pretty consistently. The 10-year, I'd say the 10 and the 30, the volumes are a lot more random, so I'm not going to touch it. Never leave your current. Well, it wasn't voluntary. Situation was kind of dumb, but really what it come down to was the auto industry not doing so hot right now. So tested the API of Alpha Advantage. It's a good way to get free stock data. Yeah, yeah, you can get pretty good. I was just browsing around on Reddit, and I saw this video where Donald Trump is talking to Hugh Hewitt, basically saying that there are people coming over into the United States that are murderers, and he says that being a murderer is in your genes. That's a big no-no. That's a big no-no. How much experience do you have in the domain? What do you mean? There's probably a language barrier. Try that one again. I'm surprised I'm not seeing more about this. This is like a overtly racist opinion that Donald Trump shared there. You're French? Hmm? Oh, we get a lot of Europeans on this stream because most Americans aren't awake. Okay, yeah, what is the word? What does it mean? In the domain. But yeah, but so I think that the French word domain means pretty much the same thing as the English term for domain, but what is the domain that you're talking about? I feel like there's a noun missing here. Yeah, okay. So I'm guessing that what you're asking me is like, how much experience do I have trading? I've been watching the markets for about 15 years, and I've been trading futures for about 7. I'm eyeing this again, like I'm wondering if they make another like marginal new low, you know. You know what I should do, by the way? I should start the stage over here. For those of you on the new $3 a month Discord, you can go over there. I set the stage up and you can see the screen so that you can see where the cost basis is. Now is a situation that might be interesting to look at. Okay, super beginner question, but the price or prices in the middle of the bid ask, are those the prices you always get filled at? Sorry if that sounds dumb. Oh, okay. I think I understand the question that you're asking, and it's not a dumb question, because if you don't know anything about the DOM, then you're not going to know what you're looking at. So the blue are limit buy orders resting on the exchange, right? The orange red are limit offer orders sitting on the exchange, okay? The 2 columns in the middle are basically market orders coming in and hitting those limit orders. Think of it like that. Right? Those offers dropping down and hitting out those bids, or market buys popping up and hitting those offers. So what I'm watching here is, first, how much liquidity, resting liquidity, is there at an individual price, like right there at 12. And then when it ticks up to it, does it change how much pulls? So typically I would expect to see at least 500 to 1,000 pull. So far it hasn't, right? They've come up to 12. Those offers aren't pulling. That tells you a little bit of something. They've even traded 18 contracts into it and it hasn't pulled. So that's the next step, is when they've traded into it, how much is there? Okay. And then there is, when they trade through it, how much does it actually take to trade through it? And that's what you'll see right here. That's what you'll see in the center. I would expect that it will take at least 2,000, if not more, to get through that 12. Those offers probably actually do want fills, and so they're going to need a decent amount of market volume to be able to push through it, okay? Then the next thing is going to be, when 12 goes bid, how many orders stack after it? How many orders immediately stack? How many orders stack once, we're a little bit higher than that, right? And these are all kind of little things that I'm looking as tea leaves to get some idea of the market. But in order to really see like what the market situation is, like what the latent liquidity is doing, I need to be able to see how many market orders it actually took to trade. So every time that it ticks up or down, I'm watching how many orders did it take. Because if it's going like 1,500, and then all of a sudden, big iceberg, 5,000, and then after that, only 50. After that kind of suggests you're gonna move. That's the sort of thing that can create a trend. So that's why these 2 columns in the middle are the very most important. And what I'm really watching is this area right here. I'm watching this area right here, and then I'm kind of watching these areas over here out of the corner of my eyes. Put a stop limit, it may not. Yeah, what does that have to do with what I said? Anyways, So just right now, you can see there's about 2,600 trading at 11.5. And there's still a lot on the bits. So it seems to me like the imbalance between buyers and sellers is roughly equal right now, and that they are getting enough liquidity in this area to be happy staying here. And so I don't really see us moving out of here anytime soon. At some point we will move, but right now they look happy, right? Like they're gonna trade this until there's not really any, you know, they're gonna need to move into a new area in order to generate enough liquidity to do what they need to do. I don't know if it's gonna come to that, because like, what would be the impetus for it today? I mean, it is a Tuesday, so we can get some stuff happening. I guess the most interesting scenario we could have would still be if they start going to lows and really develop a trend. But so far, every time that they come down there, they just make a marginal new low and then immediately bounce. Also, should note, we are getting some weird behavior in the Japanese yen. That might matter more. Hans Parlay in the stage channel. Welcome. That's a name I don't recognize, so welcome. Yeah, what's with the Japanese yen like dropping really hard and then bouncing back up there that quick? It's a little unusual, and the treasuries didn't follow it. I'm still reading this thing about these comments that Donald Trump made. Like, if they're saying, well, like when you put it in the context, it's not like quite what he's saying. But I still think that to say that murder is in somebody's genes is kind of incorrect. I mean, in some cases, yes. Like, some people are psychopaths, you know, but he shouldn't have said that. That's a problematic thing that he said. That's going to cause some problems, I think. And I'm just surprised that I haven't seen more of it. There's this subreddit on Reddit called The Everything Bubble. And it's kind of funny and ironic because it's one of the biggest bubbles out there on Reddit. If you had sold one contract of ZNs 4 days ago and closed now, you would have made $6,000? Is it really that much? No. Now, let's see here. 112. No, 114. 114 to 112. Maybe ZB, but not ZN. Okay, we're gonna measure it. Somebody was saying in Discord that it was like a $6,000 move, and I'm like, no, I don't think so. Let's say 1, 2, 3, 4. Let's just come from here. Yeah, how did he get that? Sorry, we're doing some math in Discord here. They were trying to calculate the way that, you know, like how far it moved. And so they said, well, it moved 2.12. And then they said, like, we divide that by 0.005 and then times that by the tick value, 15.625. And I think that's how he got 6,000. Let me see here, 2.12 divided by 0.005 times 15.625. And he got 6,000. Yeah, that's correct. But really, a tick is 1/64th. 1 divided by 64. So 0.01565. So if you were to say 2.12 divided by 0.15625, it's 135 ticks times 15.625, and it should be in the $2,000 range. There you go. That would be more correct. That's the correct calculation. But really, if you want to calculate treasuries in your head, the easiest way to like a big move, the easiest way to do it is going to be to remember that one handle. So like when we're looking at the price here, it's 112. What are we at right now? 10.5. Okay. This digit right here. So like 112 to 113, that's a handle. This is a handle. Handle is the near smallest whole number. Okay. One handle equals $1,000. Right. So I know if I moved two handles 0.12, it's going to be 2,000 point something. Easiest way. Octavia scratched that. They're still pushing, huh? I don't know. The flows still look kind of iffy. It looks like that the treasury is following the Japanese yen, and I don't know what's causing the selling in the yen. It seems like that there's something going on in currency world. Yeah, I see what's going on. He thought it was 0.005 was like the tick value, because when you look here, like the minimum fluctuation is 0.005, but that's not what it means, right? The way that treasuries are priced are in 30 seconds. So we price them in 30 seconds because that's the way that they're priced over here in the bond. You can see there it goes from 31 and then back to 0 because they're 30 seconds. And then the 10-year is priced in half of 30 seconds. So really what that means is 10, 30 seconds plus, you know, 1/2 plus a half. Or conversely, 20, 30 seconds plus 1 would be 20, or sorry, 64s. 64s. So 21 64s. That's really what that price is equal to. So he's saying, no, see, look, this is what it looks like in the book, so I'm going to mess with it now. Okay, go and look at ZF. Because what's going to happen is he's going to look at ZF and it's going to be like, okay, so it goes from 5 to 7, so that's 2. But then it goes from 7 to 0, that's 3. What's going on there? This is once so he posted it and he said no, it's 0.002 in that one. Oh, but he's gonna realize here in a second, no, it's slightly different. So I posted the thing and I said that, and now he's looking at it and it's pausing a little bit. I tell you what, the treasuries are so esoteric, right? Like that's one of the most interesting things about it is that like it's priced in a way that like turns people off. Wow, Smitty says here's the F in clearing prices. Apparently, you can have it display it in decimals instead of instead of the notation that I've got on. I don't know what you'd call it. What market feed are you using? I use Rhythmic. This is fun. I really enjoy teaching this to people. Using RTrader or directs? Oh, using RTrader. Yeah, I use Rhythmic Trader Pro, and then there's like a plugin mode, and both the Jigsaw and NinjaTrader connect through that. Oops, wrong one. Wrong one. Delete image. It's so silly, but it really helps when you're looking at the yield curve. Why not just increase the tick value and make the number of ticks consecutive? Long again, I'm going to add if we break VWAP. Where is the V? Oh, at 12.5. I'm liking it better along here now. I mean, this since the top of the hour, it's been good. Big limit order in oil at 73. Is a 96 really that big of a deal? I would say there's usually at least one order like that. Have you ever done contracts or options? I've never done options on futures. I kind of want to. Back in my day, bigots blamed immigrants for bringing down property values. That's funny. You know what, though? In the United States, I don't think that we really have a whole lot of evidence for immigration increasing the price of housing, although at some point it could become a problem. In Canada, though, there's very substantial evidence to suggest that the huge influx of immigration that they've had in Canada is increasing housing prices. Ooh, you got it. Oh, you did. Wow. Dude, it went up there so quick, too. I don't know, man. Like the evidence that we had for that it would go back up there was a little bit flimsy. I do kind of think to some extent that the market maker kind of has to rebalance. And so the market maker really wants it to come back to that price. It's just like, when is that going to happen, you know? So I think in that situation, that was the trade that we should have been going for, right? So mean reversion, return back to the cost basis is just, why would I have taken it there in that particular spot at like 12? That's the issue that I always have. And then I look at it and it's like, well, it's like such a tiny amount, but then like you could do it. And you know, how does it work out with those tiny amounts over time? It adds up. But it still doesn't answer the question of like, why there? If I think that it is going to revert and the market maker is going to rebalance their inventory, how do I, what can I have that will suggest that it will happen here or here? I tell you what, man, r/advice animals on Reddit is super obsessed with the hurricane right now. There was so many threads last night that were like, "Oh, I hope that the hurricane like flattens Mar-a-Lago or something like that." And oh my gosh, that thread was a dumpster fire. And everybody pointing out that like it's not in the path of the hurricane and it's on the wrong side of the state, and that's like the most populated area in Florida, so it would be a complete disaster if that happened. And oh my gosh. And then there's this whole thing about like the government controls the weather, and like, oh, they're controlling the weather to make hurricanes worse or something like that. Oh my gosh. That I have a hard time with that one because you know what? Like, am I allowed to say this? I don't think that they're listening right now. Government does control the weather, guys. They do. But not to that extent, okay? Like, they can seed clouds and do things to like make it so that you get more precipitation in an area, for instance, okay? But I really don't think that they can control the weather to the extent that they can make hurricanes, okay? Like, good grief. I tell you what, man, it sure is scary how it will go like exactly to that cost basis. There really is like a real edge in that thing as a target. Is just, and I don't know how you're doing it, Octavius, because it seems like you get it most of the time. Because my problem is I want to back test it. I want like the real hard data, and how do I know when it's going to make that reach? You know, so that I could back test it and show that it was effective, in that like using that as opposed to, let's just say, some like the average true range or something like that was a more effective target, right? I think we could prove it statistically, but first they'd have to have the situation to say this is when it's going to go and make it back, and I don't know how to tell that. Seems like we're down and the flows are kind of sideways and a little bit wonky. That's when they're gonna do the rebalance. That makes a rebalance more likely, but what's the timing of it? In this case, we started to see this rise up after 10 o'clock Eastern time, so there could have been something to do with that too, although there wasn't any news. I don't know, man. I think that if I had... Ooh, yes, I think I could do this. Okay, so there was a study recently that's linked in the Discord, and they had data from Amsterdam Exchange, and basically all of the orders of traders in their index futures. the Eurex 200 or whatever it is, right? And so based on that, you could sort out like all of the different participants and like what their inventory was and things like this. And in that study, they said that one of the things that was most predictive of where price was going to go in the short term, at least, like over the next tick, was how much inventory they had. When they had too much inventory, that it was going to tick up. So if you had that, then you might be able to sort out, okay, situations where market maker appears to be rebalancing their inventory or allows it to come back up to rebalance their inventory. You could see that. You'd be able to see that. It'd be like, okay, in times when the market maker's inventory has become high and declines back to zero, what are those situations? And then when that happens, if you were to take a trade when that happens, would you do better if you set the target to our cost basis, or if you set the target to like average true range of a move or something like that? What would perform better? And then we would be able to see that our line performed better. So with better data, we could maybe prove it. With that kind of data, we would also be able to optimize it a little bit by factoring in how much inventory they have and when they're stopping out of trades, so that like this other line does seem to matter, but not as useful. You should be able to get to a point where this line would be a little bit more accurate, and you would be able to see almost exactly like it comes to that line, and then like everybody's stopped out, and then that's as far as it can go, and it will start to reverse, you know? Put it in Discord predatorial setup. In the old Discord, in the studies channel under the quant section, quantitative finance papers, that's where it is. Over here. Research papers. Actually, I can just link it. That's what you're asking. It's on SSSRN for some reason, but if I could get access to that data, that would be super nice and useful. I really want these studies where they like had all of the data from the Taiwan Stock Exchange over a certain number of years and whatnot. I'd really like to get my hands on that, because these guys, they did it to study the profitability of retail traders, right? But I don't think that they were really doing the statistics in a way that is like the way that the retail traders think of it. Like the way that the retail traders think of it is, well, of course everybody fails because like everybody fails at the beginning and most people don't make it long enough. But what I would like to see is something that's like, okay, for accounts, the number of years that account so you could split all of the retail trader accounts into how many years they've been trading. So all of the ones that have been trading 1 year, 2 years, 3 years, 4 years, 5 years, and plus, right? And then of those traders, what percentage of them are profitable? And according to the typical retail trader thinking of things, like the profitable amount in the 1 year should be like super, super small. But then as you go along, it'll get higher and higher and higher, right? Until you get to the point where like the guys that have been around for 5+ years, most of them are profitable or something like that. That's the way that retail traders talk. I think, though, that it will just stay down here. That 80 to 90% of retail traders will be unprofitable, regardless of how long they've been trading. That's what I think. They have the data out there to calculate that, and they didn't do it in that manner. So if I had the data, I could do it. You know what else would be an interesting study to do, though? Is if we, like, let's say that we did it for the CME. All trade, like, let's say that we had all trades with, like, who submitted them and everything. All that data for a 10-year time span. 10 years, I think, would be really good. And then we sorted out, okay, who are the people that are retail traders that were profitable over a 5-year time period. So we filter it down to just those people that have been retail traders that are profitable over 5 years. And I bet you that it's only going to be a handful of people. Like, it's only going to be like a dozen people or something like that. And then the question would be, who are they? Who actually are those guys? Right? And not necessarily like what their strategy is, but I have a sneaking suspicion that of those dozen or so guys, that the majority of them have some sort of an informational advantage that the average person can't get. Like congressional insiders or, something like that. Kind of suspect. So you could do that and see if there's some pattern in it. But how many would you actually get down to? Because if it is down to a dozen, then that would be a pretty significant finding in and of itself. That of all the retail trade, like if we were to come in, of all retail traders that have traded, those that are profitable over a 5-year time period, there's only a dozen of them. That basically means no retail traders should be day trading. Or another one. You get all the retail traders that have been trading over like a 5-year time period and they're successful. I bet you that most of them would be swing traders. Like how many of them would actually be day traders? Probably not any of them. Or only one or two or something like that. Anyways. Take a look at what I posted in that same channel? No, where it posted where? Or did you post one in here? No, I don't see where you're talking about, Octavia, sorry. Interest rates, no. Oh, in the paid Discord, in the interest rates channel. Oh, okay. Okay, so he's got a picture here. To answer your question, 11,417 were stuck for 10 to 20 minutes for strong flow. 2 and ticks against them, they cover. 2 ticks? Is that what you're saying? Is so they're stuck there, and it's been more than 20 minutes, and it gets 2 ticks away from them, they cover. That might be work. That might be work. It would be hard to be. We would have to utilize our to 10 minutes or more. And is the size like it has to be more than 10,000 contracts? I don't know about that one. Let's see here. I'm gonna try and something here. Transparent. Transparent. Inventory. Inventory long, cornflower blue, inventory shorts, orange. And panel 1. Oh, come on. New panel. There we go. There we go. Okay. I have to combine periods to come up with deltas. Okay. Yeah, I was gonna say is like, okay, so like over 7K and over 10 minutes or more, but like identifying that with an algorithm would be tough, wouldn't it? And I think part of it would be like there's nothing else going on, right? It's like some guys went short and then like nothing's happened, kind of a thing. Because you don't really, because I was wondering, would you see it in the inventory? Because what we should see in the inventory is, let's see here, because it was sellers, right? Oh, that is delta per price. That's interesting. Okay, but so it is selling. So we should see here, and where? 10 half. Is that 11 half? So it was through here that it happened then, huh? I thought, or what I was thinking rather, was, okay, what if I put the inventory numbers up on there? Do I see in that area the long market maker adding a ton of inventory? No, we don't. We don't see that. What we do see is the short market maker adding a ton of inventory on its way back there like that. But that's probably, the market maker probably isn't going short. He probably wouldn't want to have it on that side. He probably was on the long side. So I was kind of hoping that I could detect it by, if I see the inventory go up and then it stays there for 10-20 minutes, then we would say, it's gonna go. But that didn't work. I can see how you can work it. I'm also, though, a little bit weirded out by that I don't see the I don't see this in cumulative delta. I think, so I'm going to close this one. We don't need this one anymore. Well, let's minimize it for now. I'll come back here to this chart. So this is kind of the area that we were talking about. And the only big change I see in cumulative delta is maybe there. Yeah, so it's sneaky. Yeah, he says it's sneaky. It doesn't seem like it's something that you can see in the cumulative delta. He's seeing it in his footprint chart. What is the time frame of those bars? Are those 30-minute bars? It looks like 30-minute bars. I don't really have a good I don't have access to the footprint charts in NinjaTrader, but I do in Jigsaw. So if I come in here and I do ZN and we're on Z, right? Yeah, we're on December. And I do a footprint chart and I do a 30-minute interval. Oh, it's 10-minute interval. Okay. 10-minute interval, apply. Okay, and then the first thing is I kind of feel like that I don't really like the diagonal bit. Tilt mode. Okay. And which bar is this bar right here? I think it's like that. I think it's like this. So if this bar is the 740 bar, as I suspect, I can make it a little bit larger. So there's 1, 2, and this one, this one, this one. And I can see, yeah, I don't see quite the same thing that you do. Because for it to be 11,000, I would expect there to be something somewhere where it's like, you know, like 16,000, and then there was a certain amount buy on the other side, and it would come out to be from 9, so 7 to 750. Yeah, I do have that right. But I don't see it in my footprint. Curious. I think there are some other ways. So here, the histogram style, there's volume profile. There's also delta. Volume profile created. Oh, I see what it means by the volume profile. Yeah, volume basic is probably what I'm more used to. Or delta. I mean, it seems to me that the one that he's seeing is this like spot right here. But it doesn't show up on my chart the same way that it... Oh, sorry, I'm like not even showing you guys the same screen. My gosh. See, there's like a spot where there was like 6,000 and 7,000 sold there. Well, that's another question. Is it per tick? Is each one of those rows a tick? Or are you doing tick aggregation here? Maybe it's that. No, looks like it is per tick. Weird. Weird. I know, like your explanation for how you're doing it certainly makes sense, though. I'm not able to duplicate it, and I'm not sure I could program something based off of that. But maybe if I start to keep an eye on it, I might be able to find a way. Might be able to find a way. Also seems like something that's not necessarily like fundamental to the market, but just like the way that people are trading it right now, right? So that's another caveat that we would have to keep in mind if we were doing that. Well, another thing that I want to note, by the way. It did seem like that the Japanese yen was kind of like falling here. So when the yen was falling, we saw a little bit of a dip in the treasuries, and then the yen pushed back and the treasuries pushed back. Then the yen fell and the treasuries did not go with it. Also, during this time, we had a pretty good drop in oil. There's $1, almost $1 came off of oil. So, Mr. Pushup says, oof, down 4K. I hope that doesn't mean that somebody lost 4K trading. It's too much to lose for retail trading. But anyways. Super interesting. So I think one of the things with this is that, like, for this rebalance trade that we've got here, right? To really be accurate about it, I think that we would have to be able to, like, see people's positions and things like that. Like, it would be a situation where it's like the market maker has enough inventory, they've taken on enough inventory in one direction that they're really not holding their offers. Like, let's say that it's we think there's going to be a rebalance and there's going to be a buy. Okay. So that would mean the market maker has taken on a lot of long inventory. So he's not going to hold his offers as much so that it will float back up, and then he can rebalance his inventory back at the cost basis, essentially. Okay. I would have to be able to see, like, that there are trapped traders, quote unquote. So I would have to be able to look at all of that volume in the past and be able to say, okay, there's a bunch of people that are not, because somebody might be coming in and selling it, right? And they're a large meta order. And so I wouldn't want to count them into this calculation because they don't care. They're going to sell it until they have all of their what they need to sell, and they're not going to quote unquote rebalance or puke out or anything like that, right? So we would want to look at this, where it's retail traders and whatnot, or short-term traders, let's say, accounts that we know are short-term traders that are all short, and then that's okay. It's been long enough. They're going to start puking, yada, yada, yada. Right? We would have to be able to categorize the volume by like who's trading it. There might be some ways in which we look at the context of the order and categorize them in that manner. So like one of the ways that we have to filter order flow is by like size, right? Like we can say, here's all of the 1 lots, and here's the 500 lots, or whatever the deal is, right? And we can categorize them by that. But what if we found a reasonable system to categorize them within the context in which they were taken? Like if the level 2, or if the depth of market at the offer is less than 500 and they buy, then they get categorized as, orders trying to catch the edge. Or they get categorized as part of an iceberg or whatever the deal is. And then when you run this kind of analysis off of those, what do you see? And maybe those sorts of things would help you categorize what type of traders they are. I was like, I'm going to be stuck on this all week now, Octavius, because like that's, I feel like the kind of trade that I've never been able to get to work out for me that I think would be a really essential part of a good solid day trading strategy, right? Is the endogenous moves when nothing's really happening. Take trades more often, It's interesting to me, though, that it's like 2 ticks. There might be something to that. Well, anyways, it's time for me to get going. I've got some research to do for the interviews that I've got today. And then after that, hopefully be able to do some writing and maybe a little bit of editing. So I would like to get those, at least 2 other videos. Like if I could get 5 videos out through this, in between jobs time, that would be super awesome. I think that would help the channel out a lot. So I should get to it. Anyways, and I saw your comments there, Mr. Bishop, but I don't remember what you're talking about. The constant uptrend, profit and loss, and then the busty. I'm not sure. I don't remember talking about that yesterday. I don't remember a whole lot about yesterday. Because, oh man, yesterday was the day. It was just like the get through it day because my wife was working and I had to watch the kids all day and Asher was throwing up. So he didn't throw up last night. So I hope we're good. The way he gets up this morning, we're going to feed him and he'll be okay. But, and then we get a hockey game tonight. So I'm kind of hoping that yesterday was like the bottom of the canyon, I shouldn't say things like that. Knock on wood. You gotta. No, don't be superstitious. Being superstitious is bad luck. I, for some reason, have this irrational positivity about the future here. So I'll see you guys tomorrow. Stay excellent, team.